Imagine walking into a trading floor on Wall Street, but something feels different. No shouting, no ringing phones, no paper flying around. Just the low hum of servers, glowing monitors, and endless data streams racing across screens. This isn't a sci-fi movie. It's the modern heart of finance. Welcome to the new Wall Street, where artificial intelligence now runs the show. For decades, success in trading depended on instinct. People reading charts, guessing trends, and trusting their gut. But those days are fading fast. Now, algorithms are the new traders, capable of learning from billions of data points, reacting in milliseconds and adjusting faster than any human ever could. AI doesn't need coffee, sleep, or motivation. It just needs data, and the markets have plenty. Every second, AI systems scan global news, social media posts, company reports, even satellite images of parking lots outside shopping malls, looking for signs of rising or falling consumer demand. It listens to CEO earnings calls and analyzes tone of voice to measure confidence or stress. It can detect subtle market shifts before headlines even break. While a human might spot one pattern in a day, AI sees thousands in a heartbeat. And in a world where every second counts, that's an unbeatable advantage. But how does it actually work? First comes the data, everything from market numbers to weather patterns. Then comes learning. AI systems are trained on historical trends, identifying how certain signals, like a sudden oil price change or a shift in political tension, affect the market. Once it learns these relationships, it begins making predictions. And finally, it acts, executing trades, adjusting portfolios, or sending alerts to investors in real time. Think of it like this. A human trader might see that tech stocks are rising and decide to buy. AI, on the other hand, might already know why they're rising, how long it might last, and when to sell, all before the rest of the market catches up. It's not reacting to news, it's predicting it. Take hedge funds like Renaissance Technologies or Two Sigma. They use AI models so advanced that even their own traders can't always explain why the system makes a certain decision, only that it works. These funds generate billions by combining mathematics, machine learning, and constant self-correction. Their algorithms evolve every day, learning from every trade, success or failure, and adapting instantly. AI also powers what's known as high-frequency trading. These systems make millions of trades per second, capitalizing on micro-movements in prices that humans can't even see. 1 cent of profit per trade sounds tiny, but multiplied by millions, it turns into millions of dollars. If a person blinks, AI has already executed thousands of trades. It's finance at light speed. But AI's reach extends far beyond the billion-dollar firms. Ordinary investors are using AI too. Apps now analyze portfolios, suggest trades, and even balance risk levels automatically. Platforms like BlackRock's Aladdin analyze trillions in assets daily, helping fund managers make safer, smarter decisions. Even small retail traders use AI tools that can scan markets and forecast price trends instantly. In short, AI has democratized data, giving anyone access to tools once reserved for Wall Street giants. Yet, with all this power, there's risk. AI makes decisions based on data, and data can be biased or incomplete. A single glitch can ripple through the entire financial system. In 2010, a flash crash caused nearly $1 trillion loss in just minutes, all because of automated algorithms reacting too quickly. Since then, regulators have been racing to catch up, trying to understand systems that evolve faster than human laws. Even today, many firms admit they can't fully explain why their AI makes some decisions, only that the numbers seem right. That's both impressive and terrifying. The ethical side is equally complex. Should machines decide who gets a loan? Should an algorithm determine which companies get billions in investment funding? As finance becomes more automated, the human element, empathy, fairness, moral judgment, becomes harder to protect. AI might know the markets, but it doesn't know what's right. Despite that, there's no slowing it down. Banks, hedge funds, and fintech startups are racing to develop better AI every day. Goldman Sachs uses AI for risk modeling, JP Morgan uses it to detect fraud, and small startups use it to create predictive trading bots that can outperform human analysts. The race isn't just for profit, it's for survival. In today's markets, not using AI isn't a choice, it's falling behind. What's coming next might change money forever. We're entering the era of autonomous finance, markets that trade 24/7, guided by AI with little to no human oversight. Imagine a system where algorithms talk to other algorithms, buying, selling, and negotiating across continents, all without a single person pressing a button. That's not a dream. It's being built right now, and it could redefine how wealth is created, distributed, and controlled. But here's the truth. No matter how smart the machines get, the human role isn't disappearing. Humans still provide the creativity, ethics, and strategy that AI can't replicate. The best investors aren't fighting against AI. They're working with it, blending human intuition with machine intelligence to create a new kind of investor. The winners of tomorrow's markets won't be the loudest or the boldest. They'll be the most adaptive. Because in the world of finance, speed used to matter most. Now, it's learning. And AI learns faster than anything we've ever built. So, what does this mean for the future of Wall Street? It means fewer traders shouting into phones and more data scientists running simulations. It means decisions made by code instead of instinct. And it means that the balance of financial power, who wins and who loses, is shifting toward those who understand technology. But it also opens doors. AI isn't just for the rich anymore. From students trading on their phones to small investors building smart portfolios, AI tools are available to everyone. The same algorithms that guide billion-dollar funds can now guide you if you know how to use them. The future of money isn't about who has the most experience. It's about who learns the fastest. AI doesn't blink. It doesn't sleep. It doesn't forget. It learns endlessly. And it's already rewriting the story of Wall Street, one algorithm at a time. If you found this fascinating, don't just watch, take action. Subscribe to Wealth Lens, where we explore how technology, money, and power are shaping our future. Join a community of thinkers, creators, and investors who see what others don't. Because understanding tomorrow's systems today is how real wealth begins.